Hello everyone. In this class, I am going to teach you about the rules of debit and credit. See, in this, there are mainly two types. They are based on the traditional approach and modern approach of accounting. First, we will see the traditional rules of accounting. This traditional rules of accounting, it is also called as golden rules of accounting. See, under this approach, accounts are classified into three categories. They are personal account, real account and nominal accounts. So, first we will see the real account. The rule of real account is debit what comes in and credit what goes out. Debit what comes in and credit what goes out. So, here real account, it represents assets, liabilities and equity which appear on the balance sheet and have a continuing nature. So, now we will see the items, they are come under assets, liabilities and equity. In assets, there are mainly two types. They are tangible assets and intangible assets. Under tangible assets, cash, land and building, machinery, furniture or inventory. Okay, these items, they are come under tangible assets. Means tangible assets means they are the physical assets you can touch. Okay, so these are the items like cash, land and building, machinery, furniture, inventory or stock. They are comes under tangible assets. And intangible assets, it means they are the non-physical assets but with value. Okay, their examples are means the items comes under intangible assets are goodwill or any patents, trademarks, copyrights and liabilities and equity. The items they are come under liabilities and equity are capital account or any reserve or retained earnings. Okay, so these liabilities and equity, sometimes they are to be considered as part of real account. So the rule of real account is debit what comes in and credit what goes out. So now I will explain this real account through one example. Real account. Example is purchased furniture worth rupees 5,000 in cash. Okay, so purchased furniture worth rupees 5,000 in cash. See, here purchased furniture means furniture is real account, means the asset. This is the tangible asset. Furniture is the tangible asset worth rupees 5,000 in cash. Cash, this is also asset. Okay, it is also comes under tangible asset. Now we have to check the rules. See, the rules of real account is debit what comes in. So here furniture comes in. Furniture account debit and credit what goes out. Credit what goes out? Cash. We are paying the cash for purchasing the furniture. Cash goes out. So furniture account debit to cash account worth rupees 5,000. Okay, here again I will explain for purchased furniture worth rupees 5,000 in cash. Furniture, that is comes under tangible asset and cash, it is also comes under tangible asset. So the rule of real account is debit what comes in. Debit what comes in? Furniture comes in. So furniture account debit to, sorry, and credit what goes out? Credit what goes out? Credit what goes out? We are paying the cash to cash account for purchasing the furniture worth rupees 5,000. I hope this real account is clear to you, all of you. Next, we will move to the next account, that is personal account. Now we will see the rules. The rules of personal accounts is debit the receiver and credit the giver. Debit the receiver and credit the giver. See, personal account, yes, it represents accounts that are related to the individuals or organizations or institutions or representative personal account. So here personal account represents individuals. Individual means these are the accounts of individuals, means they are related to natural persons. For example, Ram's account or Suresh's account or Mr. John's account. Okay, this is about natural person. And second one, organizations, means these are the accounts of the organizations or entities that are not natural persons but they are treated as individuals for accounting purpose. For example, ABC Limited, XYZ Bank, Reliance Industries, these all are comes under artificial persons. And next third one, that is representative personal account. Means what? Means they are indirectly related to individuals or group of people. Okay, means typically these are the accounts for outstanding or accrued expenses or prepaid expenses or incomes. For example, outstanding salary account means it represents the employees to whom salary is due. It represents the employees or the group of people. It indirectly relates to the individuals or group of people to whom salary is due. Or prepaid rent account. Means what? It means it represents the landlord for whom rent is paid in advance. Or any accrued interest account. Okay, these are comes under representative personal account. Fine. Now we will see the example. Example, that is company. This is the example for real account. Now personal account. Company pays rupees 10,000 to Mr. Ramesh. Mr. Ramesh for what? For services rendered. See here. Company pays rupees 10,000 to Mr. Ramesh. See here, Mr. Ramesh is the natural person. So that we have to check the rules of personal account. Because personal account, it represents the individuals. They are natural persons. Organizations means they are the artificial persons. Or representative or personal accounts means they are indirectly related to the individuals or group of people. See here, Mr. Ramesh, he is the natural person. So what is the rule of personal account? Debit the receiver. Who is the receiver in this transaction? Mr. Ramesh. Mr. Ramesh is the receiver. So Mr. Ramesh account debit to, for what? For services rendered, and the company pays rupees 10,000 means they are paying the cash. Here cash comes under, see here, cash comes under tangible asset. So it is related to real account. Now we have to check the rules of real account. Rule of real account, it is debit what comes in and credit what goes out. Credit what goes out? Cash is goes out. So Mr. Ramesh account debit to cash account, that is rupees 10,000. So in this transaction, see, personal account will also come and real account it will also come. The rule of personal account is debit the receiver and credit the giver, and real account debit what comes in and credit what goes out. Debit the receiver means here Mr. Ramesh, he receives the payment of rupees 10,000 in cash for services rendered, and credit real account. Now we have to check the rules of real account. Credit what goes out? Company is paying cash, means cash is goes out to cash account, that is rupees 10,000. Okay. Now we will move to the next account, that is nominal account. First we will see the rules. Nominal account, debit all expenses and losses and credit all incomes and gains. Debit all expenses and losses, credit all incomes and gains. So here nominal account, it is an account that represents income, expenses, gains and losses. And now we will see the items that are comes under income, expenses, gains and losses. First we will see the items that comes under income. Income or revenue accounts, these accounts record the money earned by the business. For example, sales revenue or interest income, rent income, dividend income, commission received or earned, discount received. Okay, these are the items that comes under income. And expenses, next one, the items that comes under expenses are rent, salaries and wages, any utilities or depreciation expenses, advertising expenses, office supplies or any interest expenses, means it records the costs or expenses incurred during a period. Okay, next one, that is gains. It means these accounts, it tracks any gains the business make from non-regular activities, means gain on sale of property or gain on sale of investment. And next one, losses, means it tracks any losses the business incurs, means loss on sale of asset or loss on investment. Okay, so these are the items that comes under losses. Now we will see the example for nominal account. See here, rule of nominal account is all expenses and losses, credit all incomes and gains. Now I will explain through one example, that is nominal account. Example for nominal account. Rent paid. Okay, I will take very simple example. Rent paid rupees 5,000. Fine. Here rent account means rent, it is a nominal account because rent is an expense. So what is the rule of nominal account? Debit all expenses and losses. So here rent account debit to rent paid, means we are paying the cash. Cash is real account. It is a tangible asset and it is credited as, what is the rule of real account? Credit what goes out. Okay, credit what goes out? We are paying the cash to cash account, that is rupees 5,000. So in this transaction also two accounts will come, that is one is rent, It is a nominal account because rent is an expense. The rule of nominal account is debit all expenses and losses and credit all incomes and gains. So debit, rent account debit to cash account. Cash is the real account. So it is credited as cash is going out. So to cash account, that is rupees 5,000. Okay. So this is about nominal account. So I hope this concept is clear to you all. If not, please leave a comment. Thank you.